Hello, welcome to Rabell Realty Group's podcast, Monday at 2 o'clock. Hope you're on and watching, because today is going to be a really great one. I'm Kristen Rebecca.
I'm Rebecca Johnson.
And we have the biggest deal in Gainesville, Robert Fillyaw from Annie Mac, a really good friend of ours and a great lender who teaches us so much every day.
All there is to know about lending. Thanks so much for having me on, ladies. I don't know about the biggest deal. I think probably Dan Mullen's the biggest deal, or Kyle Trask right now, or
the
Kyle
biggest
Pitts,
deal
right?
in lending.
Maybe the biggest deal in lending.
Yes,
right?
they will go to you for lending.
Yes,
at least you
let's
hope
so.
They better.
They better.
Obviously, you're a big Gator fan.
Huge Gator fan.
Up,
go
so
Gators.
Go Gators.
Time to take care of business in Atlanta.
We'll see you in Atlanta in 2 weeks.
Yep.
Good job. All right. Well, thank you for being on here. This is our very first guest. And again, like we said, longtime friend that we send as many of our buyers to as we can, because we know you'll treat them right. And I guess, you know what? Let's start with the Monday market moment with Rebecca.
All right, so for the month of December, which is only 7 days in, so far we have 61 active listings, 52 pending sales, and 55 closed transactions. Not a bad start to the month for only really being, it was really 4 days in, if you think about it, because then we had the weekend and then today, and I pulled these this morning, and I know you and I had several places close on Friday that we have not closed out in MLS yet.
Right,
so a really strong start to the month.
Yeah. As we mentioned before, sometimes it takes a couple days for things to close.
Exactly. So. The only place that's not a strong start, active listings.
Right.
So if you're out there and you're thinking about selling, don't let the holiday season stop you. Go ahead and contact us. We're already prepping homes to hit the market for January and February. So we would be happy to get together with you, discuss pricing, staging, marketing, and getting your home sold. So if you have any questions, always reach out to us and our team.
Yes, we need to see that number higher. You don't want to be at you don't want it to be close to close and pending. You want it to be a lot higher, so that there's enough inventory out there.
Exactly.
So definitely call us.
Well, I'm excited to talk to Robert.
Me too.
Yes.
Tell us a little bit about, you're at Annie Mac.
Annie Mac Home Mortgage.
And where is that located currently?
So currently our office is on Northwest 13th Street, but imminently we are going to be relocating into Jonesville. So great group here, number of very strong lenders who've been in the market for a good while. We're a little different than some of the other lenders out there in that we're a direct lender. So we don't broker, we don't have to go through someone. Direct to Fannie and Freddie, which are the secondary entities who basically make the rules for mortgages. So it gives us a little bit of a edge up, because we don't have a lot of extra rules on top of it. As with anything, when you're trying to get something through a system, the fewer rules and regulations, it makes it easier to do and to accomplish the end task of getting you closed.
Nice.
So.
Now, we like to stay local with our lenders, but you can work loans for anyone in the state of Florida.
Oh yeah, absolutely. And
what other states are you?
Yeah, so our group is I'm blessed to have a group that's actually in 5 states, and we have license coverage in I think 7 or 8 states. So Florida, Georgia, South Carolina, Tennessee, Mississippi, Texas. We just added Colorado. We're getting ready to add Pennsylvania. So yeah, we can absolutely assist you.
All right.
That's impressive.
Good. Yeah, that is impressive.
And how long have you been doing mortgages?
I knew that question was going to come up. A long time, longer than I like to think about. So I closed my first mortgage loan ever in 2003. So I guess coming 17 years.
There we go.
I didn't realize you were that old.
Right? I don't look it. Keep my moisturized, right?
There you go.
So, and I remember, I think one of the first deals, I know it's the first deal we ever did together, but I think it was one of your guys' first deals. One of my first deals when I jumped into mortgage full time and only did mortgage was way back in the day, like
it was 06 or 07.
Yeah.
I was head on that deal, actually. It was before we were really 100% business partners.
Yeah. So that's
it was a VA loan.
It's a VA loan, VA manufactured home.
Your absolute specialty.
Yep, absolute.
Oh, you're talking about toll.
Yes.
Yeah.
Yeah.
No, that was with us together.
Yeah. That's right. We had the listing.
Look at that. We know the names from back in the
absolutely.
day.
Jeez,
I
we've
remember
already
he wrote.
resold that.
He had a
No,
red
not
leather
yet.
jacket and a helmet. He rode
Oh, he rode a
He was
motorcycle.
like a vet tech.
Yeah,
now.
he was. That was a vet house.
So,
he had his horses there.
Yeah, we've been working together a long time. That's
Yeah,
awesome.
we have. We have.
Wow,
yeah.
that was that wasn't our first listing, but that was one of our first.
One of our first. And what I can say about Robert was why we still work together is because it didn't matter who he was working with. He always treated them exactly the same. So this guy was a first-time home buyer buying a manufactured home. It had a horse barn on it. So I think about 6 horses could be on there. And you took care of him.
Absolutely. Well, I mean, that's the
like,
key, right?
Like anyone else. So.
Everybody is equal when it comes to the home buying process, and you treat people the way you want to be treated.
And as realtors, we want to work with someone, in our industry with the lending, and when we send them to a title company, to an inspector, we want them to be treated well so that they feel like they were taken care of by their realtor, because we're the one who connects everyone most of the time. So,
and it's your name on the line, right? We're very cognizant of that. And I
Let's remember your first.
That's it.
Thank you, Jackie.
That's absolutely true.
That's true.
I tell my team all the time, and I think this is really important to remember, is no one wants to get a mortgage.
Right.
It's a pain, right? It's a hassle. Let's be
pain.
real.
So become even more of a pain.
It's even more of a pain. So what we really do is provide service, and we want to be that Disney, Ritz Carlton, like that. That is what we try to bring to the table from a service level.
Yes, we as realtors experience that with you, so we appreciate that.
Awesome.
Yeah, that's why we work together still. So we were going to talk about some myths out there, dispelling some myths from buyers.
I think there's a handful of things that people just have a misconception about in the home buying process, and it keeps them in this perpetual cycle of renting, which is really throwing money away, right?
Right.
So if we can dispel some of those and maybe get a few people qualified and out of that rental cycle, it'd be pretty.
I read something today. 52%, and it was on a Facebook post from a real estate coaching company that we know of. So I don't know where he got this facts are from, or where he got them from, but 52% of college graduates are still living with their parents.
Sounds right.
And he actually asked, what would you say to them?
Wait, and he said that was the most, I saw that right before I came in, the most since the Great Depression.
Yes. So I don't think that that's because they're lazy. Some of the answers said that. I think it's because they're not educated on getting a home loan. The home loan, the possibilities out there. We have people come in on our CRM, which is your customer relations management. And it's through our website. We'll come in all the time saying, no, I cannot buy a house. And then we give them just a little bit of information. So they say, oh, wait, I can.
And then we're off and running.
Exactly.
Yeah, and that statistic's very interesting. I think there's 2 major parts to that. I think the first is, and we talked about this on y'all's team meeting recently, is family starts are later, right? So people, even though they're graduating, they're waiting longer to get married and start a family, and that's delaying their kind of urge and sense of urgency to go and purchase a home. So I think that's part of it. But a huge piece of it is the lack of financial literacy. There's not a common understanding. We don't teach it in schools. It's not taught in the home. So you have people who come out into the world, and they don't know what's available. They don't know what's out there and what they can and can't do. You guys see it all the time. We see it all the time. One of the biggest things is the misconception is, I need 20% to put down on a house. Right? I don't have 20%, and I can't save 20. And how long is it going to take me to save 20%? And huge misconception and just inaccuracy in the home buying process. We have many loans where we can structure it, and it's 100% financing. You need no money to put down.
Right.
So a lot of ways to work with a buyer if they have an interest to purchase a home, to get them in with a smaller or lower out-of-pocket cost. That's probably the biggest hurdle we face with trying to get people into home ownership.
I think a lot of people I'm hearing lately are my bills, my costs, to pay off those student loans are too big. And how do you talk with them about that?
Yeah, I mean, student loans are, it's a challenge for a lot of people right now because of the way that they count into debt to income ratios, which is how we qualify buyers. We look at your income in relation to your debts, and even though those student loans may be deferred, a lot of the loan programs still require us to count some portion of that or some percentage of that into your monthly debt obligation. So it can be a challenge. I think if there's anyone out there listening who's in school or thinking on taking student loan debt, that's something to understand and know that even though it may be quote unquote a deferred payment that you're not making, it still can it will factor into your ability to purchase a home.
So it's really getting in front of a lender like yourself and looking at that on those ratios.
Absolutely. Before, just as sooner is better than later, right?
Right.
So the quicker we can look at that, if you are going through school and having to take some, because it can and will have a pretty big impact on your ability to purchase a home.
Ooh, I've got one, I think.
Perfect.
Sorry. I think I've got one. This is probably a myth on probably buyer and seller side. VA loans are difficult.
Yeah, that's a huge myth.
Perfect.
I think they're
huge myth.
Great
Yeah.
loan programs.
And you mentioned VA is near and dear to my heart. I spent 8 years in the Marine Corps and love helping our veterans. There's this misconception that it's more difficult, that it's not as strong of a buyer because it is one of those 100% down
Very untrue.
programs. 100% untrue. It's a benefit that veteran has earned. It's that they're entitled to use now. And I would rather do a VA loan than any other loan. So from not to get too technical, but from a lending standpoint, it really gives us the most flexibility on a debt to income ratio. It gives us the most flexibility from a credit acceptance and approval ratio. Most flexibility on employment history. Like it's probably the most flexible loan that's out there. And most of your veterans who use a VA loan, most of them still put some money down.
Yes.
Or if they don't, they have large cash reserves afterwards. It's not that they can't make a down payment. It's that they choose not to because, frankly,
why would you?
If rates are in the 2s on a 30-year fix, why would you put money down? You can put that money in somewhere else and make a greater return. And most VA loan, I think the average credit score on a VA loan is somewhere in the mid to low 7s, like
That's what
710 to 720.
We've talked about this many a times and how their credit is oftentimes better than the average all around.
Absolutely.
The average all around, what is 630?
No, it's a little higher than that. It's probably in the 670s.
670s,
Yeah,
okay, right. So then you're in the low 7s for a VA
loan.
loan, a lender, so right.
Well, and here's the other thing that I think sometimes agents and sellers don't grasp with the VA loan. So a VA loan is guaranteed, 25% of that loan is guaranteed by the Veterans Administration. So as a lender, right, if that loan's going to come on my books and if that loan were to default, the VA is going to kick in 25%, whereas with a FHA loan or a USDA or any other conventional loan, that doesn't happen. So lenders are more likely to take not a chance, but to underwrite and approve that loan because they have that big guarantee backing them. Whereas some of your other products, you may think the buyer's stronger, but one little thing that's off and the lender has an unsellable loan. So they won't it's more stringent.
So really, the only reason why people are saying that these are more difficult loans is because of the appraisal process. So talk to us a little bit about that appraisal process.
Yeah, I think so. I think it's because of the appraisal process historically, because it used to be very, very difficult. Like VA loans.
But same with FHA loans.
Same
they
with
were
FHA
a lot
loans.
more difficult.
A lot more
We're
difficult.
going to talk about FHA. I got a good question on that one.
Oh, set me up. The appraisal process used to be super nitpicky and very difficult and let's be frank, costly to the seller to bring a home to where it would qualify for VA.
Now they are still stringent on things.
They're a little bit more stringent.
Wood destroying organisms. That inspection, which is separate inspection, needs to be what we call clean or clear. So in Gainesville, in Florida, in general,
you're going to have a dirty.
You're going to have a dirty one, right? Because any home, even if it's not made with built with wood, it's going to have some sort of
we just had a listing that had all the wood rot fixed.
Right, wood rot.
Before we listed it. And by the time we got to the inspection, we had like 2 little spots.
Right.
Wood rot.
And a little spot can make it dirty, right?
So I think so. You're exactly right. The WDO is probably the biggest hurdle on VA from an appraisal standpoint, from a property standpoint. But I think most buyers, and you guys tell me if I'm wrong, most buyers, whether they're doing a VA loan or not, are going to get a WDO.
Yes.
And they're going to try to negotiate for whatever's on there anyway. Right.
Right. Sure.
Seems to be the case.
So, are you really mitigating that much risk if you're not doing a VA loan? I don't know that you are or not.
True.
I've just always thought the misconception was realtors and sellers and everybody sees that it's 0% down and they're like, oh, this person has no money.
Which we've just talked about, right?
Yeah, which we just talked about. But the game changer for me on that was because we had done several VAs with you before, but it wasn't until I had this guy. I'll never forget him. I'm not going to name names, but he bought like a $400,000 house out there by Jonesville Sports Park, and he had plenty of money. But he's like, I'm a veteran. I earned it. I want to buy it VA. And the realtor like fought with me a little bit until I was like, no, he's got money. He just doesn't want to put it down because he doesn't have to. And he was actually going to use his cash to renovate the house. Because, it's a $400,000 house in Gainesville, so it needs everything.
Right.
So speaking of FHA and stringent guidelines, here's my FHA
I
question.
feel like I'm being set up.
No. And the FHA guidelines have come down a lot because I remember we once had our first listing.
I know where she's going with this.
Right, and we had to have the bars cut down. Yep, it was in Springtree and it had burglar bars on there, and we had to have them cut down.
No, that's still a guideline.
Oh, is it?
Yep,
Oh,
there's just not very many houses with bars.
Well, yeah, because we've cut them all off now.
Yeah.
I still have one more.
So that's it. So what you're going to find, and this is the rule with all types of loans across the board when it comes to appraisals, is if it is a structural issue like or a components issue like roof, plumbing doesn't work, the well shot, AC is not working, that's going to be an issue on appraisal. Or if it's a health and safety issue, right? So banks are looking for ways to mitigate liability. So if it's a health and safety issue and it exists at the time that we get the appraisal, it has to be mitigated. So then we're not liable for you buying that house and something happening. And that's where your burglar bars come in, right? If there's a fire and you have no egress out of the house and you burn up, well then it's...
So are those bars with all of them or just the VA and FHA and USDA?
That would be anything.
Anything.
Even the
Okay.
conventional one.
So we had only experienced it with FHA.
I just remember we found that out and we were like, how do we get the bars down?
I want to go back really quick to VA appraisals.
Yes.
Because again, I know this is a myth that maybe you can bust, but the appraiser's a lot more stringent on rules. Kind of going back to where we were, but so one thing is that they have to use the neighborhood.
No.
They can't go outside of the neighborhood.
That's not true.
Okay.
Yeah. So the VA appraisal guideline is a little bit more stringent, but not to the point that it would if your value's there, your value's going to come through. It wouldn't hinder. And the flip side of that coin is you have more dispute power with a VA appraisal than Tidewater's just
We're going to get into that in a minute.
Okay.
Let's take a break. Let's take a break and we'll come back because that's a big conversation right there.
Absolutely.
All right. Thank you.
I discovered Rabell Realty Group when I went to purchase my first home in Gainesville. So I actually identified Kristen and Rebecca as the listing agent on one of the properties, reached out to them, and they helped me buy my first three properties in Gainesville. The problem that I was looking to solve when I joined Rabell Realty Group is I primarily do real estate investing, and I was using another agent, and I was seeing that I was doing a lot of the work behind the scenes but not getting the commission credit for it. So really one of the things that I wanted to do was get into real estate so I could better handle my personal real estate investments, and then it just kind of took off from there, and I really enjoy working with clients now. So definitely some of the benefits of working for Rabell Realty Group is all of the extra things that they provide to you. The marketing. You can actually go in through some of their tools and create your own marketing using their templates, which is really nice because you're not kind of boxed in. You have that freedom, but you still stay with the brand. So that was one of the things that really attracted me to Rabell Realty Group, was the branding and the support that they provide. Rabell Realty Group has really aligned with the values that drive my success by providing a very flexible environment. So being a single mother, it's very important for me to be there for my son, but also there for my clients. And so Rabell Realty Group allows me that flexibility. There's no pressure on me to go out and sell, but they're there to help me support the clients that I am serving.
All right, we're back. Thank you for joining us. If you're joining now, we're with Robert Fillyaw of AnnieMac, and we're talking about common myths. We're dispelling common myths for buyers. Right now, we're really talking about VA loans because that's, I think, the biggest myth, and how VA loans are difficult, but really how they're not.
They're not.
So
they're my favorite.
Your favorite.
Cliffhanger, right?
We
went to break and we're talking about VA appraisals and kind of some of the differences there. So we were saying that while the rules may be just a little bit more stringent, if you have the value, you're going to get the value. But the flip side of that coin is if you need to fight for your value, you have way more outlets than you do with any other type of appraisal.
All right,
Rebecca,
so
or Tidewater.
Right, so A, can you fight appraisals for any other loans?
You can,
Mm-hmm.
but it's kind of a deck stacked against you situation, right? Because here's what happens. If we get an appraisal in from Mr. Appraiser and I send it to you and it's short and you say that's short, it doesn't work. So I have to say, okay, send me comps to prove why it's short.
Right.
And then what we do is we go back to Mr. Appraiser who sent us the first appraisal and we say, hey, we think you're wrong. And here's why we think you're wrong. And
People
we want
love
Kind of like
Right.
a referee.
Exactly.
They don't want to be
They don't
wrong.
wanna be wrong.
It doesn't matter if you show the replay and if they're clearly wrong, they're still going to
Who wants to be told that they're wrong and then say,
right.
And how often do they say, oh, no, you're right, I was
Very
wrong?
rarely,
Very,
from
very
my
rarely.
experience.
Very rarely. So that's kind of the dispute process with every other type of loan, right?
I mean, including the VA loan, truthfully. But then you have the second part of
You've
it.
got the second tier, right? So the first part with VA is first of all, they're going to throw the flag. Every other product, if your appraisal's coming in short, you don't know. It just comes
You don't
in
know
short.
until it's here.
Exactly.
Right. You don't know until it's in. With VA, if it's coming in short, the appraiser's going to say, hey, I'm having a difficult time finding comps to support your value. I invoke Tidewater. You have 3 days to give me comps that you think can help me make my decision.
Right.
Right? And that's a huge win because now before they have submitted their report, we get the ability to help them. So now they don't have to come back and change things and say, oh, I make a mistake. It's I can make sure that I have it right to begin with, right?
And we
Or
can
accurate.
give closed comps, pending comps, even active comps.
Yep, absolutely.
And you can even write up all the reasons
Write up your
why this
narrative.
is the best comp. Right.
You can send them as much information and
Exactly.
documentation as you want. Now, there are times
Still doesn't go through.
it still doesn't go through, right? And
Still does
and
not appraise.
I would say, in my experience, when we get Tidewater on an appraisal, probably somewhere between 65 and 70% of the time, it comes in at or above value.
Right.
So 40%, 35% it comes in under. At that point, we talk about it. If it's acceptable, if we think it works, then we're going to renegotiate, do whatever, move forward. But there are times when we're just like, okay, this still isn't right? The appraiser's way out of base, whatever. So that's where VA is really unique in that now I can take it to the regional loan center and we can dispute it directly with VA. And VA doesn't go back to the appraiser. They have their own staff appraiser who reviews and does their own report on the thing, on the property. And
they're looking at your Tidewater response as well.
they're looking at the report. They're looking at your Tidewater response. They're looking at any additional data that we supply to them or narrative. And we actually get to tell them, hey, this is what we think the value should be. And then they look at it and make a decision and come back to us. So, it's not 100%, but we have had some good success. We had one property that came in $40,000 short. And the realtor did a really good job of pulling some data together. The house had been updated and upgraded, and we sent all of that in for Tidewater, didn't go anywhere. Got it back, sent it back, and disputed it through the VA dispute process. Got the report back, and they increased the value by $45,000.
Nice.
Nice.
Right.
So that would not have happened with any other product.
So being the realtor on the other side, you really have to give as much information and narrative, like you say, to help it.
Absolutely.
If you're not giving anything, and I would say both realtors really need to be a part of this, the buyer's realtor who's bringing the buyer, and the listing realtor who has the listing and has priced it at that. Obviously, we know right now with multiple offer situations, lots of offers are coming in well above list price, and we're having to work with that as well.
Yeah,
Yeah, sounds
and I
like-
think we're going to continue to see that through 2021. The statistics of what the market, we're going to see refinances pull back a little bit, but the purchase market's going to remain strong, and I think inventory is going to continue to be a challenge, as we saw with that first slide. Right, there's just not a ton of listings hitting the market.
It's not. It's going to be, I think, more of a challenge than it is this year for sure. I have a question. I often hear buyers think that loan officers lose all the documents because they're constantly asking for the same thing over and over. But what it really is that you have to have current and updated documents within the last 30 days,
Right.
correct?
Yeah, so there's two pieces to that, right? And it all comes down to communication.
Yes.
All of this comes down to communication. So the first piece is documents will at times need to be updated. COVID has really changed this a lot also. It used to be that when we took a loan application and we got your pay stubs and your bank statements and those documents that can stale date, as we call them, they needed to be within 120 days of your loan application. Now most lenders have went to a 30-day window. So that means, if you have a 45-day close, those pay stubs you gave us in the beginning aren't going to be the same. And they want to make sure that your job hasn't been shut down. You're not furloughed. You're not, there's a lot of other steps that we take to do that as well. So that's part of it. The second part of it, though, is it goes back to financial literacy. And I've asked for bank statements, and you sent me a bank printout from your online banking, and I come back and say, no, I need your bank statement.
We need to see how many times you went to McDonald's and how many times you went
Yep.
shopping.
Yep.
Yeah.
Mm-hmm.
But it's
You also need the information, like the screenshot from your phone, from your or from the computer that shows everything. Doesn't necessarily have your name on it all the time.
Right.
Doesn't
And
always have
that's
right,
what it
the
is.
key information.
The key
that's
information.
needed.
So they're
Don't send it back redacted. I've
Right.
had that happen a lot,
Yes.
where people
Yes.
redact everything, and you're like, well, we can't even verify your
we
name
don't
on
even know
this.
this is
We don't
yours.
know
So,
who's this. Yes.
yes, they have sent something that they, to meet that initial request we make, but we're having to make a follow-on request because what they sent didn't work. It didn't suffice. And that's where the communication comes in, because a lot of loan officers will say, like, I still need your bank statements. And the customer's saying, I sent you my bank statements. No, you sent me your transaction printout that doesn't have your name on it. That doesn't. But instead of saying, no, instead of just saying that, you sent me your transaction history that doesn't have your name, I need a true bank statement. It gets lost in communication. So we try to really do a really good job up front of setting the stage and letting people know what to expect and what we're going to need. And a lot of the onus on the home buying process is on the buyer, because the reality as a lender is that my team can only move as fast as we're provided with the information. Right? I don't have access to your W-2s or your bank statements or your pay stubs.
I can't believe it.
No, listen, we talk about this
Facebook and Google do not provide that information.
Exactly. We talk about this every day, and we have this mantra that we really kind of live by, that's every day counts.
Right.
If you look at a loan transaction from the minute that contract comes in, every day counts. So, getting those disclosures back in, getting your documents in, the faster you do that, the smoother your loan's going to move.
Right.
Absolutely.
And it helps to get you what you need in a timely manner rather than argue and say, I shouldn't have to do that. I mean, I always tell people, I'm like, just remember, you're borrowing
Money.
$100,000
Right.
or a
Right.
couple $100,000.
Yeah.
The more you borrow,
Yes.
the more closely they look at you.
I think that comes back to communication as well, right? Because
Initial communication.
people, we do this every day, right?
Right.
So it's old hat to us. So we're asking for something, and we know why we're asking for it, because it's to meet some crazy guideline that Fannie Mae has out there that makes absolutely no sense.
Right.
But the logical person, when we ask for that, they're like, well, why do you need that? I'm not sending you that. Whereas if we would have said, hey, send me this, here's why we need it, then those walls come down. And it's like, oh, that makes sense. Or maybe it doesn't make sense, because there's a lot of stuff that we ask for that frankly doesn't make sense, but we have to have it to fit in the box that is mortgage lending. And I like to set the stage with customers and say, hey, look, we're going to ask you for a bunch of stuff. It's going to be a hassle. You're probably going to get frustrated at some point. My job is to make it as easy as we can for you to go through this process. And I want you to know this isn't personal. It's the same thing for everybody. So if there's ever something you don't understand or something that you're not sure about, please let us know and we'll talk about it. And 99% of the time, if you just have that level of communication, it moves really smoothly.
Now, one thing I know about people is that we don't read. And I say we because we're all people. People do not read. But what you all have at Annie Mac is a really great initial letter. And it comes with, once they turn in the contract or maybe their information to get pre-approved, you send them a fee worksheet, which basically shows them the estimated closing costs. And based off of how much they're putting down, the loan amount, all the information that you have. But you also have a letter to them that sort of is the initial guidelines to what you're looking for.
Yep.
Kind of include a little bit of this information that if they read it, they would already know. But what are the top, I would say, 10 things that are on there that we all have to repeat to buyers over and over again?
Yeah.
Wait, I know.
Yes.
New house, new furniture.
Yes.
Don't go buy new
furniture.
If you do, is it okay to use cash?
It depends.
Right.
It depends. So I think the big bold letters at the bottom of the letter that you're talking about say, before you do anything, if you're not sure, call and talk to us.
Call and ask
Let's
first.
have a
Exactly.
conversation.
Right.
New house.
New house.
New cars.
New car.
No new cars.
No new cars. New house, new job.
Oh,
new
no
job.
new job.
Right? So the key to remember, guys, when you qualify for a mortgage is it's a snapshot in time of your financial situation. So if you make any changes to that, it's not necessarily that we're not going to be able to overcome it. It's how much paperwork and how much time is it going to take to overcome it. And invariably, whatever that issue is that has come up is going to come at the worst possible time as you're trying to close, as the U-Haul's packed, right? Like, so that's communication goes a long way. We try to make sure we set the stage and the expectations up front. And if you have any of those situations, letting us know, we can tell you how to structure it, how to document it to make sure it's as minimally impactful as possible to your transaction, your closing time.
What's the best contact
Number
for you?
to reach you.
Yes, best number to reach us is 352-204-9600.
And we will put that up on the Rabell Facebook page today so that everybody can have the Annie Mac FMT
Contact info.
line.
Yes.
So don't go buying the
Don't go buy the airplane.
Don't buy an airplane. No.
You can probably get away with booking a plane ticket, like to go somewhere.
Maybe.
Don't use your credit card, right? So honestly, guys, the reality with getting a home loan is for the purchase that you're doing, and really in Florida, being a foreclosure state, the risk that's involved and the cost if you do default on it. It's not a difficult process. If you have a loan officer who is experienced and is going to set the stage and talk with you and communicate and kind of hold your hand through, which is really what we strive to do. And you work
things that you do.
all these
so
things that we
crazy.
do. It's
Right.
crazy, but that's why our team's really successful. I think that I don't have the final numbers, but we're going to be somewhere close to 400 closed transactions for my team.
Amazing.
And then
just the team,
just
not
the
even
all
all of Annie Mac that you.
Yeah, so all my
manage.
group is going to be 1,200, 1,300 for the year. So it's it's a process we know well, and we can help you get through quickly and painlessly.
One other thing that I like to point out is, and you always have terms for it, but you're the type of lender that if I have a closing coming up and I give you this loan with this buyer, with the contract, you look at all of your files and say which one's coming up next. And then there's that other lender whoever's first in is first out.
Oh, that's
Talk about that a little bit so people understand that.
So that's a big difference also, and it kind of separates us a little bit. And that comes because we have operations under our roof. So underwriting, processing, everything from the minute your contract comes in, your deal comes in to close, I kind of have control over, which is nice.
Right.
So there are a lot of lenders that process by first in, first out, is what you're referring to. So basically, all of mortgage lending is a queue. You're waiting in line at some point, whether you're waiting in line for your appraisal to come back or for the underwriter to look at you or your closer to send documents. So there's most places actually, whoever's in line first is who gets the underwriter first. Well, that's great in theory if everyone had the same time on their deal and the same situation, but we're people and we don't. We're trying to perfect the imperfect process, right? So I may get 2 contracts. I think we got 4 contracts in today, right? And one of them's closing the end of December. One of them's closing the middle of January. 2 of them are closing in April because they're new construction. So the April ones actually, I think, came in first, but you're not going to put them, it doesn't make sense to work them first. You work the one closing in December first. So we do kind of a blend. It's a little bit of first in, first out, but it's heavily driven by what your closing date is to make sure that we hit that timeline.
That's good. Now, our friend Duncan, thank you, Duncan, for being on here, has asked a really important question, and it almost sounds like a little bit of a joke, but it's true. Can I get my down payment deposited to my checking account from a relative?
Absolutely, 100%. So every loan product has a little bit different tweak on the rules. But yeah, you that's called a gift, and there's not a single loan product out there that won't allow a gift from a relative. There are some documentation parts that come with it that you need to make sure that you're aware of, especially if you're doing like an FHA loan. We have to source the donor's ability to give you that money. So whoever's giving you the gift, we're going to have to get their bank statements and show that they had the money and the ability to give it to you. So that's just something to talk with your loan officer up front to make sure that you know exactly what's required. We have had situations before where the buyer says, I'm getting a gift, my mom's going to give me a gift, whoever, and we go to mom and say, hey, we need your bank statements, and mom says, I'm not giving them to you.
Because that money came from under the mattress.
Right. So, and we do, if it's an FHA loan, we do have to, if they're giving you a $10,000 deposit and the day before there's $10,000 cash that goes in your donor's account, that's not going to work. And it seems really silly, but the reason is because there have been people in the past where the seller would give the money to your relative for the relative to give it to you for the down payment, and then it's not really your down payment, and it doesn't hold the same weight. Right. We're very much an industry where the actions of a few affect everyone. So,
and it's trying to mitigate fraud.
Mitigate fraud. It's all about fraud mitigation.
Yeah, for sure.
I feel like we could talk to you all day.
All day.
Absolutely.
But I know it's getting late. Can you show us your why you do what you do? I think we have a picture of.
I can. Do I have it?
Yes.
Let's throw that
Of
up
why
there.
Robert does what he
So
does.
I am blessed to have wonderful 10-year-old twins, a boy and a girl, Reagan and Liberty, and a beautiful wife of we're coming up on 14 years.
Oh man, y'all are old.
Yeah, we are old. So there's the kiddos. So that's my why. It's about building for them and giving them the best life possible. Ideally, right, as I build the branch out, one of them will take it over one day.
It doesn't work like that. We've already discussed this.
Yeah, it
All
probably
my
won't.
kids, I have 3 and they all hate real estate.
Yeah. Reagan
But right now they do.
Reagan right now says he's going to take the mortgage business over, so
There you
we'll
go.
see.
See, there you go.
We'll see.
Oh, we got one more question from Duncan,
I'm
our friend
interested in
Duncan.
that.
How can we get a barn-dominium built? That one's a tough one,
A
Duncan.
HELOC. You need a HELOC.
Absolutely. If you have a home that you have equity in already, that you can
There you go.
take a home equity line of credit against, that's a great option. Otherwise, that's what we would call kind of a non-conforming. If you think barn-dominium, log home in this area is non-conforming, berm home,
Circle homes.
circle homes,
yeah,
shipping
that's fun.
container homes, tiny homes, anything like that is kind of not the norm. The problem you're going to run into is there's not a lot of comps, so you're not going to get a valid appraisal. So you're going to want to find a lender that will do what's called a portfolio loan. That's going to be like your smaller, more local institutions or credit unions, and they actually will make the loan based on more so just your credit and your relationship with them. They're not so much worried about the collateral, and they're going to make that loan and keep that on their books, as opposed to putting it on the secondary market where they have to meet these standard guidelines. So if that would be the best option for your barn-dominium.
Man, he's got me thinking so many more questions. So we're going to have you back.
We will have to have you back,
to
as
go
always.
through. There's a whole segment of loans that we didn't even get to talk about.
Absolutely.
But in the meantime, post your questions in the comments section below for Robert and his team, and they can get those answered for you. If you're thinking about getting into real estate, you can join the Rabell Realty Group team by emailing us at join@buysellrebell.com. And you can connect with us on social media if you find us on Facebook, which you're watching right now, hopefully. Instagram, sorry, I didn't recognize the camera. TikTok, which we just posted some more content, so go check us out there. And you can always email us at info@buysellrebell.com. And then
We will have these on a blog. All of these topics will be on a blog very soon, and this is where you can find our blog at buysellrebell.com/blog.
I think we have some other content from Robert there.
And thank you to Elio, the Fiesta Media, for your amazing podcast and for hosting this every week, every Monday at 2. So come back, join us next week, and we will have more great information about real estate and, again, back to the holidays. So we'll see you next time.
Thanks,
Thank you.
ladies.
Thanks, Robert,
Bye,
so
everyone.
much.